Every year, business owners ask me the same question. Do I need to file 1099s? And the answer is usually yes, if you're paying independent contractors. Hi, I'm Tiffany Gonzalez. I'm a CPA, a small business coach, and one of OnPay's subject matter experts. And today, we're talking about how to pay 1099 contractors the right way, what makes contractor payments different from payroll, and the mistakes that can cost you time, money, and deductions. If you work with freelancers, consultants, gig workers, even occasionally, this is something you want to get right from the start. Let's start with the basics. Independent contractors are not employees, and because of that, they get paid very differently. With employees, you control the schedule, the process, the work itself. You also withhold taxes, you issue a W-2. But with contractors, you're paying for a service. They control how the work gets done, and they don't receive employee benefits, and you don't withhold taxes from their payments. That difference, it matters because paying contractors is not payroll and it shouldn't be treated like payroll. One of the biggest issues I come across is misclassification. If someone is functioning like an employee, working set hours, following your process, relying you as their one and only client, calling them a contractor doesn't make them one. The IRS looks at control, financial independence, and the nature of the relationship. On top of that, the Department of Labor and many states apply their own tests, some of which are even stricter. Misclassification can lead to back taxes, penalties, and audits. So this is an area where guessing can get really expensive. Once you've correctly classified a worker as a contractor, paying them is fairly straightforward if you set things up correctly from day one. So let's review those steps. First, collect Form W-9 before you pay them. Before you send a single payment, you have to collect that Form W-9 from every contractor. This form gives you their legal name, their tax classification, their taxpayer identification number, so like an EIN or social security number. If you don't collect the W-9 up front, it can be a bit of a pain to get it later, especially around January when contractors are busy with their own year-end work. Next, set clear payment terms. You should clearly agree on how the contractor is paid, how much they're being paid, and when they'll be paid. Whether it's hourly, by project, or on retainer, all of this should be documented in a written contract between the two of you. Having clear agreements protects both parties, and it reinforces that, hey, this is a contractor relationship, not employment. Then you want to choose a payment method. Contractors can be paid by direct deposit, ACH, check, wire transfer, or some other online payment platform like OnPay. Many businesses use the same payment method for employees and contractors, and that's fine. Just make sure that the process stays separate behind the scenes. So let's talk about hourly versus project-based pay. Yes, you can pay contractors hourly, but paying them by the project is often better when it comes to supporting that independent contractor status. When you pay for a deliverable instead of hours worked, it reinforces that you're paying for expertise and results, not necessarily like time on a schedule. Hourly pay isn't automatically wrong, but when it's combined with oversight or fixed schedules, it can really blur the lines. If you pay a contractor $600 or more in 2025 or $2,000 or more in 2026, you're required to issue a Form 1099 NEC. These forms must be sent to the contractor and filed with the IRS by January 31st or the next business day if that date falls on a weekend. This is why staying organized throughout the year, tracking payments, collecting W-9s early, this all makes such a difference. Here are the issues I see most often: misclassifying workers, paying contractors without W-9s or contracts, mixing W-2 payroll and 1099 payments, double reporting payments made through a third-party platform, long-term contractor relationships that end up functioning more like employment, The good news is that all of these are pretty easy to avoid with the right systems in place. Here's the bottom line. Independent contractors can be a great way to grow a business, especially if you're not ready to bring on full-time help, but only if they're classified correctly and paid the right way. Remember to get those W-9s before paying anyone, keep contractor payments separate from payroll, and really plan ahead for 1099 reporting. Doing these things protects your deductions and it keeps you compliant. If you're unsure about classification or setup, it's always a good idea to talk with a CPA who works with small businesses. And if you want tools that help automate contractor payments and 1099 filings, OnPay makes that process so simple. We've included a link below if you'd like to give it a try, along with additional resources to help you really stay on top of contractor pay and reporting. Thanks for watching. Be sure to hit that subscribe button. And if there's another payroll or tax topic you'd like us to cover, let us know in those comments below. See you next time.